Hey everybody, and welcome back. This is episode number 31 of the Future Solutions Fence and Outdoor Clip of the Day podcast. My name's Dave Gatto, and I'm your host. Really good episode for you in store today, guys. It's not going to be a super long episode. I'm going to keep these things super short right here. I think that I could really save you guys exponential money on this one. What I've been doing in the last couple weeks, I've been on this journey to help business owners like myself and like you that may be listening right now on how to understand their financial statements. And what I've been zeroing in on is one of the most important financial statement, guys. I've been talking about the profit and loss, the P&L, right? A lot of people, believe it or not, do not have any literacy or know how they come up with these numbers for a P&L. So I just want to give you guys a quick rundown on the P&L and then show you the three different things that we can affect on our P&L that can greatly increase our gross profit and also increase our net. So I'm just going to run it down, guys, how a P&L works, how we come up with these numbers. The first thing you're going to see on a P&L is your revenue, right? Your revenue is your total sales for the company. It's the total amount of money your company brings in from sales. That's your revenue, right? I'm just going to use an example. I'm going to say, hey, we made $300,000 for the year. The next thing that's going to be right underneath that, guys, directly is going to be your COGS, or your cost of goods sold. The easiest way to explain that, because people complicate the heck out of COGS. All the COG is an expense incurred in the involvement of bringing a product or a service to a customer's house. These typically scale with the business. The more business you do, the more sales you do, the more COGS you pay. This is not an overhead fixed expense. Some examples of a COG would be the materials, if you had to buy materials for the job. It would be direct labor for in-house employees to come maybe and install a job or to service a job. It could be subcontractor fees that you pay your subcontractors out. It could be a sales commission for your outbound salesman to make the sales call. It could be some packaging materials that were used to deliver your materials to the job site. Maybe you had to use some shrink wrap. You had to use some banding. You might have printed some labels or purchased a skid. There might have been fuel involved in bringing this stuff out there. These are COGS. So underneath revenue goes COGS. And the very next thing that we're going to address on there is our gross profit. Very simply, guys, the way we get our gross profit is we minus our COGS from our revenue. So let's just say we had, $180,000 in COGS, right? And our revenue was $300,000. So we do $300,000 minus $180,000, and we come up with $120,000. That's our gross profit. And we can easily turn that into the next thing, which is our gross profit percentage. And we just take our gross profit, the $120,000, divide it into our revenue, which our total sales for the year was $300,000. We're at a 40% gross profit. The next thing that we're going to do, guys, is we're going to figure out what our overhead expenses are. That's the next column underneath that. Our overhead is things like our mortgage or rents, or it could be, a lease. It could be utilities, gas, water, electric, FiOS, cable. These are fixed expenses that are in your business. These are expenses you incur whether you make a sale or you make no sales. So let's just use an example. Let's say, hey, we spent $60,000 in overhead for the year. So we had our $120,000 gross. And then under this, guys, we incurred another expense for our overhead, which was $60,000. So now we're left with our net profit. And by our net profit, we minus our overhead from our gross profit. So $120,000 minus $60,000 gives us $60,000 in net profits. That's what we keep, right? Then we turn that into a percentile. So same thing, guys. We divide our net profit into our revenue. So we divide the $60,000 into $300,000, and we come up with around 14%. So 40% gross profit, 14% net profit, right? So I say all that just to give you guys a little understanding about a financial statement. They get a little bit more involved in that. Things are broken down, more things spread out in those categories, but that's the gist of it. Now, there's only, like I said in the beginning of this episode, guys, there's three things that we need to pay attention to, because there's only three things that we can affect. And by affecting these three different things, that's where the rest of these numbers came from, right? So the first thing that we can affect is we can affect our revenue. We could increase our revenue. We could increase marketing. We could raise our prices up. Things like that to increase our sales, our revenue. Or we could decrease our COGS, right? Our cost of goods sold. And we could do that in various different ways by leaning out our processes, coming up with a better and more efficient way to do something, eliminating waste that's on the production floor, eliminating recycle and rework. Things like that, guys, that we could do. We can haggle with our vendors for a better price or shop around for a better price. It's very competitive out there, so we can lower our material costs. Material costs are COGS, so we can lower our COGS, right? And the final thing that we can affect, guys, is our overhead. Right? And that's what I want to focus on. I'm going to give you a couple tips and tricks how to lower your overhead and why it's so important to lower your overhead, because every dollar you save on your overhead goes directly into your pocket, goes directly onto your net profit, increases your net profit percentage, hence giving you much stronger financial statements and put money in your bank account. So who wouldn't want to do that? So the first thing that I suggest, guys, is that you take a 2-hour block of time. Now this can be a very profitable 2 hours, maybe the most profitable 2 hours you spent in your business in a while. And I want you guys to look at 3 different things. I want you to print out some bank statements, your credit card statements, and also your business invoices that you get from some of your vendors, right? Take a look at those, guys. Go through them line item by line item, right? And here's the rule. If it doesn't help you to get a customer or doesn't help you to keep a customer, get rid of it. Eliminate it. It's worthless to your business, right? This is a business. It's not entertainment. It's not nothing else like that. Get rid of it. It's not helping you keep a customer or get a new customer, right? The very first thing that I like to do is I like to audit some of my vendors in there who we buy things off of daily, weekly, monthly, or yearly. One big one, guys, is your insurance. Your liability insurance, your workers' compensation insurance, who holds the insurance policy on your vehicles, your commercial insurance, right? Your commercial policies for all your sales vehicles, your trucks, your delivery trucks, whatever you got going on out there. Very competitive market. So here's what you do. Call up your insurance provider you currently have and ask them for your declaration papers, your deck sheet, they call it, right? They're going to give it to you. They give it to you upon request. And you use that deck sheet in which they know that's what you're doing. So hopefully it'll, as one of my salesmen just said recently, sharpen their pencil and tighten up their prices because they know you're about to get some other quotes. And it's cutthroat, boy. They'll whittle it down to the bone. Now you get your deck paper and call some other insurance companies up. I did that this year, and I switched an insurance company that I had been with for 9 years and saved over $10,000. I'm not going to say who I switched my insurance to because we don't promote other companies on here really, just for the fact that we don't accept sponsorship and stuff like that with our podcast. But we saved over $10,000 between our auto policy and our commercial liability policy, right? So right there, guys, where do you think that $10,000 went? That $10,000 went in my pocket, went on our net profit. Our percentage went up. That's a huge increase right there. The next thing we like to do, we like to call up our internet provider and say, hey, guys, thinking about switching insurance policies here. I'm hoping you guys can sharpen your pencil, see what you could do, because I'm going to be shopping around. And I will shop around. And you'd be surprised the stuff that these internet companies will throw in there, bundle in there, new top-of-the-line routers, bonus points, gift cards, you name it. I mean, the sky's the limit. They'll get super competitive. You could easily save 10 to 20% on your internet provider. The next thing, guys, is to audit your phone company. I know we got 10 business lines. Then we got other lines to where we need cellular connections for things in the fields like tablets and different softwares like that. Guys, very competitive market. Again, you can save anywhere from 20 to 50% on your phone supplier, right? And you could do this all in the same day, right? And you'll start to get the quotes back. Another big one, guys, is to audit your office supplies. One of the biggest overlooked things in a company is the money that you spend on office supplies. There is huge waste, or as the Japanese call it, muda, in office supplies. So I know us, we get jammed up sometimes because our inventory system wasn't completely straightened out, and we would need things on the fly, and we would need them in an emergency. So we would call Uline. We love Uline. Uline picks up the phone before it even rings. The first time, they do it every single time like that. They are on top of it. Our stuff is shipped out and sent right to our warehouse the very next day. But guess what? we're paying a premium and we're losing a lot of money as that compounds throughout the whole entire year. So we started working with vendors who are in office supplies, right? And who can give us a very large lump sum of supplies, and we save thousands of dollars on it. And here's a big one, guys, and I'm going to end with this one right here. For now, for this part of the financial statements, there is an app out there. I have one, it's called Rocket Money, I believe. And I have it connected to our bank accounts. And it's on my phone. And what this app does is it's connected to our accounts, and it allows us to see what our upcoming payments are, what our reoccurring payments are. And we can see things on it that really don't make sense. We're like, we had tons of things. I mean, tens of thousands of dollars we were paying on software that we had trial issues for, trial CRM, trial ChatGPT, trial this, trial that, and then it automatically goes into an account, right? They say, okay, he's a customer now, and they start automatically withdrawing this money from your account, and it adds up. And so with this app, I can see that stuff, and I can click on it, and you can usually cancel with the click of a button. Or they'll give you cancellation instructions. Here's the phone number, or here's a hyperlink for the website for your login information. Here's how you cancel, step by step. So guys, right there, huge money savings off your overhead directly into your pocket. I hope this episode helped. Please tune in, guys, if you want to learn some more tips and tricks and savings in your company and things about financial statement and anything and everything business. Click, subscribe, tell a friend about it. That's all I got.